Inflation in the U.S. reached a new 40-year high in the month of June as prices for gas and food and rent keep climbing. So what does this mean? What can we do about it? Here to break it all down for us is Mike Giordano, a financial advisor with Williams Wealth Management. Thank you so much for coming in this week. Mike, good to see you. Okay, so first of all, how bad is this latest inflation number?
Well, 9.1% certainly feels really, really bad, and there's no way to sugarcoat it. That's really, really high.
Yes.
That's the case. However, the one thing that you could look at this is these numbers came from the middle of June. So they're a month old. Gas prices have come down. Most commodities have come off significantly since these numbers came out, since these numbers were pulled. So the numbers could be a little bit, outdated at this point.
Right. We have seen those gas prices go down a bit, and we're certainly grateful for that. However, how do you think that this is going to affect the interest rates on, mortgages, cars?
That's the real issue. You hit it on the head right there. And what this does is it forces the Federal Reserve to probably have to go hard again with another massive rate hike, right? We had 0.75% last month, and they're looking at least a 0.75% hike this month, or possibly even a 1% hike.
So the takeaway then, and the questions that people call you on the phone and ask you about, right? How will this affect the markets and also our investments?
Right. So you got a couple of things. The first thing is when the Federal Reserve decides they're going to raise interest rates significantly again, that's going to jack up all the different rates for mortgages, home equity lines of credit, all of these different things, car loans. They're going to likely rise if the Federal Reserve has to make that big giant rate hike. Then to your investments, this is going to create more bumpiness for the markets. Because if you don't know where the Federal Reserve is going to go exactly in terms of interest rates, then it's hard to really price how much stocks should be worth, how much bonds should be worth. So expect some bumpiness to continue.
Any idea when those rate hikes might take effect?
Yeah, so the Federal Reserve will meet here in a couple of weeks, end of the month, and that's when they make their latest policy move. So that's when you'll expect it in another couple of weeks. They'll either raise by 75 basis points or a full percentage point. You'll get more clarity because they don't like to just throw that out at people. So they like to kind of put feelers out over the next 2 weeks. So look for that.
All right, and we know that we will look for having you come back in here.
Yeah, next Wednesday. We'll do it again.
Next Wednesday, we'll talk about it again. Mike, thank you so much.
Absolutely.
Mike Giordano, financial advisor with Williams Wealth Management. Thank you so much.